Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. Tether collaborates with US lawmakers to shape stablecoin regulations. Libra token plummets 94% following $107 million insider rug pull despite Javier Milei's endorsement. Pantera Capital founder Dan Morehead faces tax probe over $850 million crypto gains. Record 600K tokens launched in January raises investor liquidity concerns. Leveraged ETFs, how they work and their role in crypto trading. Tether collaborates with US lawmakers to shape stablecoin regulations. Tether, the world's largest stablecoin issuer with a market capitalization exceeding $142 billion, is working with US lawmakers to help draft federal-level stablecoin policies. The company is engaging with Representatives Brian Steil and French Hill, key figures behind the Stable Act introduced on February 6. Additionally, Tether is providing feedback on two other proposed stablecoin bills. Tether's role in the U.S. regulatory process. Tether CEO Paolo Ardoino emphasized that the company aims to influence legislation rather than be sidelined, stating, "We want our voice to be heard in the legislative process." Tether's cooperation with U.S. authorities may lead to increased compliance measures, such as monthly reserve audits by U.S.-based accounting firms and maintaining one-to-one asset collateral for its tokens. Federal Reserve's position on stablecoins. On February 6, Federal Reserve Governor Christopher Waller voiced support for U.S.-pegged stablecoins, highlighting their potential to reinforce the dollar's global dominance. Waller stated that stablecoins could broaden the international reach of the dollar and advocated for both banks and non-banks to issue stablecoins under proper regulatory frameworks. Impact of stablecoins on the U.S. economy. Stablecoin issuers, including Tether, are among the largest purchasers of U.S. government debt, using these securities to back their fiat-pegged tokens. This practice not only supports stablecoin collateralization but also sustains global demand for the US dollar. Regulatory challenges ahead. Despite growing acceptance, Waller warned of potential risks, such as depegging events and fragmentation within the stablecoin ecosystem, which could undermine financial stability. Will Tether's active role in shaping U.S. stablecoin policies lead to broader institutional adoption and strengthen the dollar's dominance? Libra token plummets 94% following $107 million insider rug pull despite Javier Milei's endorsement. The highly anticipated launch of the Libra cryptocurrency, endorsed by Argentine President Javier Milei, turned disastrous as insider wallets siphoned over $107 million, erasing more than $4 billion from its market capitalization within hours. Massive insider sell-off triggers Libra token collapse. According to on-chain analytics firm LookChain, 8 wallets linked to the Libra team withdrew $57.6 million USDC and 249,671 SOL, valued at $49.7 million, through liquidity manipulation tactics. The Libra team has cashed out $107 million. They drained liquidity and claimed fees within hours of launch, reported LookChain. The token reached a peak market capitalization of $4.56 billion on February 14 but plunged 94% to $257 million within 11 hours, according to DexScreener. Milei responds amid political fallout. President Javier Milei, who initially promoted Libra in a now-deleted social media post, blamed political adversaries for exploiting the incident. To the political caste seeking chaos from this situation, "Your vile actions only strengthen our resolve," he stated. Warnings ignored, red flags from analysts. Blockchain analysis firm Bubble Maps had previously cautioned investors, noting that 82% of Libra's supply was unlocked and immediately sellable, a major warning sign. Meme coin frenzy continues despite risks. The Libra collapse comes amid a surge in celebrity-backed memecoins, following launches like Trump, and Melania tokens on the Solana blockchain. Despite their speculative nature, traders continue chasing profits, evidenced by a recent $28 million gain from a Binance-inspired memecoin trader. Can Libra's collapse impact trust in celebrity-backed crypto projects, or will speculative trading continue to dominate the market? Pantera Capital founder Dan Morehead faces tax probe over $850 million crypto gains. Dan Morehead, founder of Pantera Capital, is under federal investigation for possible tax violations after relocating to Puerto Rico, known for its favorable tax policies. The U.S. Senate Finance Committee, SFC, is probing whether Morehead improperly claimed tax exemptions on over $850 million in profits following his move to the island in 2021. SFC investigates potential tax law violations. The investigation stems from a January 9 letter from Senator Ron Wyden, stating that Morehead may have wrongly classified U.S.-sourced income as Puerto Rico exempt. The SFC aims to address tax compliance among wealthy Americans leveraging Puerto Rico's tax breaks. Morehead has maintained his compliance, stating, "I believe I acted appropriately with respect to my taxes." Pantera Capital's crypto success story. Pantera Capital, founded by Morehead, was the first U.S. cryptocurrency fund and has experienced over 130,000% growth in its initial investments. The firm, which manages over $5 billion in assets, has made 47% of its investments outside the U.S. IRS tightens rules on crypto tax reporting. The probe coincides with increased IRS scrutiny of crypto taxes. New rules starting in 2025 will require crypto exchanges and brokers to report digital asset transactions. The policy has sparked backlash from the Blockchain Association, which filed a lawsuit against the IRS, claiming the regulations unconstitutionally target decentralized platforms. Could Dan Morehead's tax investigation signal broader U.S. crackdowns on crypto wealth held offshore? Record 600K tokens launched in January raises investor liquidity concerns. The cryptocurrency market saw an unprecedented surge in token creation, with over 600,000 new tokens launched in January, marking a 12-fold increase from the same period in 2024, according to Gecko Terminal data from CoinGecko co-founder Bobby Ong. This rapid growth has sparked concerns among analysts about liquidity fragmentation and disjointed price action in the market. Token issuance hits record high. Platforms like Pump, Fun, which simplify token creation, contributed to the massive uptick in new tokens, Ong explained in a February 14 post. The surge reflects a broader market trend driven by bullish sentiment, but it also raises fears of diluted investor capital. Gabriel Horm, research analyst at Into the Block, warned that the explosion in token supply spreads liquidity too thin, making price movements more erratic and limiting the potential for sustained altcoin rallies. Altcoin season delayed by liquidity fragmentation. Despite market enthusiasm, established altcoins are struggling to reach their previous highs from 2021. Analysts attribute this to liquidity fragmentation caused by the flood of new tokens, delaying the anticipated altcoin season. TradFi institutions disrupt crypto liquidity rotations. Horm noted that traditional financial institutions are reshaping the dynamics of liquidity flow. Unlike previous cycles where Bitcoin gains flowed into altcoins, institutional capital is now changing the patterns of market rotation. Bobby Young echoed these concerns, stating that the sheer volume of tokens has thinned out trader attention and capital, resulting in weaker altcoin price surges compared to past cycles. Will growing token issuance impact future market trends? Leveraged ETFs, how they work and their role in crypto trading. Understanding leveraged ETFs. Leveraged exchange-traded funds, ETFs, use borrowed capital and derivatives like options, futures, or swaps to magnify the daily performance of an underlying index. Unlike traditional ETFs, leveraged ETFs aim for amplified returns, both gains and losses. For example, a 2x leveraged ETF tracking the S&P 500 aims to return 2% for every 1% increase in the index but also doubles losses if the index falls. Leveraged crypto ETFs explained. In the crypto market, leveraged ETFs function similarly, amplifying the daily returns of assets like Bitcoin, BTC. A 2x Bitcoin ETF, for instance, targets double the daily movement of BTC. However, because these ETFs reset daily, their long-term performance can deviate from expectations due to their compounding effect during volatile markets. Trading crypto leveraged ETFs. To trade leveraged crypto ETFs effectively, choose a platform. Opt for exchanges offering leveraged crypto ETFs, such as Binance or Kraken. Open and fund an account, complete identity verification and deposit funds. Select a strategy. Short-term tactics like day trading, scalping, or trend following work best due to daily resets. Manage risk. Use stop-loss orders to limit losses and set take profits to lock in gains. Performance in bull and bear markets. Bull markets, leveraged ETFs can produce amplified gains but are vulnerable to sudden reversals. Bear markets, inverse leveraged ETFs allow traders to profit from declines, but rapid market swings can magnify losses. Pros and cons of leveraged ETFs. Advantages. Amplified returns with less capital. High liquidity for active trading. Access to both bull and bear markets through inverse ETFs. Risks. Heightened volatility and compounding losses. Value decay in sideways markets due to daily resets. Higher fees from active management and derivatives costs. Tax considerations for leveraged ETFs. Short-term gains, typically taxed at higher rates as ordinary income. Derivatives tax treatment. Gains from futures contracts within leveraged ETFs may be taxed under the 60/40ths rule, blending short and long-term rates. Wash sale rule. Loss deductions may be disallowed if the same ETF is repurchased within 30 days. Will leveraged crypto ETFs gain popularity among long-term investors or remain a short-term trading tool?